Welcome back, everyone. Today, we're diving deep into the fascinating world of Bitcoin. We'll explain exactly how Bitcoin works, why it's become so popular, and most importantly, why governments are starting to take it seriously and even invest in it. Let's get started. First things first, what exactly is Bitcoin? Simply put, Bitcoin is a digital currency, often referred to as cryptocurrency, that allows peer-to-peer transactions over the internet. Unlike traditional currencies issued by governments, Bitcoin is decentralized. That means it's not controlled by a central authority, like a bank or a government. Instead, it operates on a technology called blockchain. Alright, let's break down blockchain because it's the key to understanding how Bitcoin works. Imagine a chain of blocks, each one containing transaction data. These blocks are linked together, forming an unalterable ledger. Every time a transaction is made, it's recorded in a block and then added to the chain. This ledger is distributed across thousands of computers, called nodes, ensuring that no single entity has control over it. This distributed system is what makes Bitcoin so secure. To alter any data on the blockchain, you need to change the information on every single node, impossible to do without the majority of the network agreeing to it. Now, let's look at how Bitcoin transactions actually work. When you send Bitcoin to someone, it's like transferring value directly from one person to another, without the need for intermediaries like banks. Each user has a public address and a private key. Think of the public address as your email address and the private key as your password. The private key is the only way to unlock and authorize transactions from your account. When you make a transaction, it's broadcasted to the Bitcoin network, where miners, the participants who process transactions, validate it by solving complex mathematical puzzles. Once validated, the transaction is added to the blockchain. Miners are rewarded with newly created Bitcoins for this work, which is how new Bitcoins enter circulation. One of the most unique features of Bitcoin is its limited supply. Unlike traditional currencies, which can be printed in unlimited amounts by governments, Bitcoin has a hard cap. Only 21 million Bitcoins will ever exist. This scarcity is one of the reasons why Bitcoin is often referred to as digital gold. As demand for Bitcoin increases, its value may rise because there's a limited amount to go around. Now, let's get to the big question. Why are governments starting to invest in Bitcoin? It might seem counterintuitive at first. Governments typically regulate and control their national currencies. But Bitcoin has been gaining traction for several reasons. First, Bitcoin offers an alternative to traditional financial systems. In countries with unstable economies, like Venezuela or Zimbabwe, Bitcoin can serve as a store of value and a way to conduct transactions without relying on a failing national currency. It's not subject to inflation the way fiat currencies are, and it can be accessed globally. Second, Bitcoin is increasingly being seen as a hedge against inflation and economic instability. When governments print more money, as we've seen during economic crises like the 2008 financial meltdown or the COVID-19 pandemic, the value of the currency can decrease. Bitcoin's limited supply makes it a deflationary asset, meaning its value is less likely to be eroded by inflation. Third, some governments view Bitcoin as an opportunity for innovation and technological advancement. With the rise of blockchain technology, countries are exploring how to leverage this technology for other uses, like secure voting systems or supply chain tracking. Some governments are even considering issuing their own digital currencies, known as central bank digital currencies or CBDCs, inspired by the principles of Bitcoin. Now, we've seen a few governments start to invest in Bitcoin itself. One of the most notable examples is El Salvador, which became the first country to adopt Bitcoin as legal tender in 2021. The move was part of a broader strategy to attract investment and foster financial inclusion in the country. Other governments, like those of the United States, Canada, and several European nations, are exploring the potential for Bitcoin to serve as a reserve asset. Companies like MicroStrategy and Tesla have also made headlines for buying large amounts of Bitcoin as part of their corporate investment strategies. So, where is all this heading? As Bitcoin continues to mature, governments are likely to play an even bigger role in its adoption and regulation. While some countries may embrace Bitcoin as part of their financial ecosystem, others may remain cautious or impose strict regulations to control its use. The key will be finding a balance between innovation and regulation. In the future, we may see more countries issuing their own digital currencies, but Bitcoin's decentralized nature could make it a powerful alternative to government-controlled money. The rise of Bitcoin could fundamentally change how we think about money and finance on a global scale. To wrap up, Bitcoin is more than just a digital currency. It's a revolutionary technology that has the potential to disrupt traditional financial systems. Governments are starting to recognize its value, both as an asset and as a tool for innovation. Whether Bitcoin becomes a mainstream financial asset or remains a niche investment, one thing is clear: it's here to stay. Thanks for watching. If you found this video informative, don't forget to like, subscribe, and hit the notification bell so you never miss an update. Drop your thoughts and questions in the comments below, and let's keep the conversation going. Until next time, stay curious and keep exploring the world of crypto.